Hope everyone's having a great holiday. I'm jumping on to give an answer to this question right here. I would love to hear more about your personal portfolio. Thanks for the question, Key, and Merry Christmas to you also. So let's get started. First, let's talk about the target dated fund. I'm pretty sure this is where my investing journey started. A target dated fund is a type of investment portfolio designed to automatically adjust its asset allocation over time based on a target date. So, in my experience, they come in 5-year increments. So, like 2045, 2050, 2055, for example. And they have a different breakdown by the year, and it adjusts to become more conservative as you get closer to your retirement date. So, usually you start a job, they might default you into something like this with your 401k or whatever type of retirement plan that you have, and then get you set up being into the fund that is closest to your retirement age, say 65 or 70. So I've had good experiences and bad experiences when it comes to the target dated fund. I'm going to share a good one first. But like I said, many companies, this is what you get. And you may have other options like different mutual funds at that brokerage company. But if you don't ask, you're most likely going to get put into something like this. Simple, but definitely ask and be on top of the performance. And one way that I've done this is by not necessarily sticking with the fund that corresponded to the date closest to when I will be retiring, or I will be 65 years old. I've asked them, for example, what is the fund breakdown of the 2045 fund versus the 2040 and the 2050 and the 2055, so that I can see if there was a fund that was more heavily into stocks, which is what my goal is for my portfolio currently. So I was able to stick with the target dated funds, but not necessarily the one that corresponded to my retirement date because it was not in line with my goals right now. I wanted to be more heavily invested into the US stock market. Okay, so this is a target dated fund, 2045 fund that I have a portion of my retirement in that I am happy with and I am okay with, and I have left there for many years now. I shared this fund. I was looking at a video that I did about 10 months ago, and I was at 72,000 and I was up about 90% at that time. But I just pulled this today and I'm currently up 121%, and the account is a little over 84,000. So this is a company that I worked at many years ago. I got laid off, and this is where I have been holding the funds ever since. I get charged a $5 quarterly fee, and I'm okay with that. I'm aware of my fees and my performance, and this one is working for me. So now let's take a look at this Empowerment Lifetime 2040 Fund, MXBDX. When it comes to this, total opposite of what I just shared. I was also laid off from this company many years ago, and my retirement was in this fund. As you can see at a glance, we see 1 star at the top of the screen. That's not a good thing. We see distribution fee level high. We see expense ratio 0.90 and a yield of 1.41. So I'm basically losing my growth to the expense ratio. And it just continues to get worse. Let's jump over to a graph where I can more easily show you. Taking a look at the performance, year to date, up 7.93%. Over the last 5 years, down 3.59%. So I've showed you a few points that quickly that shows you why I had to close this account. I moved it over to Fidelity and I put a large portion of it into FXAIX. Now let's take a look at that. So FXAIX year to date up 25.95%. Over the last 5 years, up 84.54%. It has an expense ratio of 0.015. It says 0.02 here. I guess they only have a default of 2 spaces, but it's even lower, and a yield of 1.20% and a Morningstar rating of 5 stars as opposed to the 1 star that we saw with my empowerment fund. Okay, so here's a look at my FXAIX position that I created from some of the funds that I had over at Empowerment. I currently have a little over 730 shares, and in just over a year now, I've grown this portfolio by over $33,000. It's up 28.79% currently. Whereas, as we just took a look at, over the last year, the empowerment fund is up less than 7%, and I would have been in a battle with my growth being eaten away by this nearly 1% expense ratio. So, in that account where I have the FXAIX, I also have some other tech stock investments, some NVIDIA and Taiwan Semiconductor, but I just wanted to touch on those are some of the things that I'm doing as far as retirement. I also do my daughter's portfolio over there at Fidelity, and we'll get into how I do the breakdown of that. But okay, also, I get a quarterly dividend, and I just received my dividend a few days ago. And my last dividend payment was $526.40. And I do have the drip turned on, so that was reinvested. And I think I got maybe about 5 shares. Now, outside of retirement, I use this breakdown to create my other portfolios, and I can use it as a guideline even for my daughter and other things. So, when it comes to my daughter's portfolio, I just do 80% into what's described here as foundation, and then 20% into individual stocks. Sometimes she obviously has a cash balance because we are still building up her portfolio. But this is a breakdown that I got from Keenan Grace that he has shared on his public YouTube channel also. So this is just a way of having a strong foundation into those ETFs, for example, exchange traded funds, those FANG stocks or M&T. Let me share what that means for those of you who may not know. The FANG stocks, we have the Facebook now, which is Meta, Apple, Amazon, Netflix, Google, which is kind of transitioned over to being the MAG 7 of the stocks that have been driving the top of the market with the largest market cap when it comes to US companies. So we have the Apple, Meta, Google, Microsoft, NVIDIA, Tesla, and Amazon. So now back to the breakdown. So because I let my portfolio get very heavily weighted into Apple stock, I haven't been able to get it to exactly what I'm sharing with you here. But overall, this is a guideline that I use to have a high percentage into the foundation stocks. For me, that would be in my taxable accounts, the VTI or VOO. And then my individual stocks that I invest into, I have my dividend portfolio where I have Realty Income, Main Street Capital, SPHD, and SCHD. And then I have my growth portfolio. I do my dividend portfolio over on Moomoo. I do my growth portfolio on Webull. And I am still about 28% into Apple stock. But over there, I also hold some VOO. And then I have Tesla, Amazon, Google, NVIDIA, Meta, Microsoft, and other companies like Disney and Target, for example. But back to what I was sharing, this is just a guideline, and you could definitely mix in other companies like Palantir or Eli Lilly, and of course, some crypto into your mix of investments. I am a person that does some trading, so yes, I keep cash on hand in order to do trades and buying power to continue my investing. So that's it. A quick recap of how I invest and what I am currently invested into. So when it comes to retirement, this account that I'm showing you right here, up 121%, is my best performing when it comes to retirement. And then over in my growth portfolio, currently, Tesla is doing the best. I'm currently up 99.89%. So, thanks for watching. Let me know if you have any other questions when it comes to this topic of where I invest and how I go about building my portfolio. Thanks for watching. Okay, bye.